And I want to bring in Amanda Agati, PNC's Chief Investment Strategist, to help make sense of this market and today's jobs report. Good morning, Amanda, and thanks for being with us. Would love to get your take, though, on this unemployment report today. 11.8 or 11.1% unemployment rate, 4.8 million jobs added for the month. That was better than expected, but does it really paint a clear picture of what's going on in the labor market right now?
Well, good morning. Thank you so much for having me. It's always great to be with you guys. I would definitely say that the jobs report in and of itself was the positive news, but I don't really want to be the downer necessarily heading into a long weekend. But the continuing claims number is really worrisome in that it came in ahead. That is higher than expectations at 19.3 million. And I think it really just reinforces the point that the jobs information and data here doesn't really jive with a V-shaped recovery. Certainly not the recovery that we've seen in the market. If you look at the jobs report itself, you have to remember that this is basically data from a month ago, very much lagged in terms of reporting here. And a month ago, frankly, we were in a much better place as it relates to COVID data and, frankly, reopening plans as well. So maybe save the fireworks for the July report a little bit. We're seeing a lot of pausing, slowing, and even reversing course on a number of reopening plans across the country. We have stimulus that needs to be re-upped at the end of the month. And so there may be some choppiness in the data as it relates to July, and therefore we think likely choppy market ahead.
Amanda, this jobs report is going to get plastered all over the internet, all over the weekend papers. President Trump surely is going to hype it up in his press conference that will start shortly. But the average American household, how are they doing financially right now?
Well, it's so hard to gauge this one. I mean, I would like to say that the stimulus that we've seen so far on the fiscal side has been kind of, quote, enough, but it's really only been a safety net, and we are not out of the woods yet. And so we're really concerned that some of the stimulus we've seen has been masking the improvement in jobs, the improvement in kind of the underlying economic data, and frankly, the market. There's this big disconnect between Wall Street and Main Street. And so it's very, very difficult to gauge it. We think that there's been some underlying level of support there, but it's not a broad-based recovery. We're still seeing, claims that in excess of 19 million. I mean, how can you say that, the average American household is in good shape with numbers like that still coming in, even with the stimulus kind of in the backdrop? So I'm sticking by and reiterating we're not out of the woods yet. We're not anywhere near out of the woods yet. And so, the rest of the summer is going to be very, very telling in terms of underlying health of the economy.
Hey, Amanda, we had Frances Donald of Manulife on earlier, and she sort of coined this phrase. She called it the stall out, that we're going to see this economy stall out in the second half, perhaps August through the rest of the year, because we're going to see that second wave of coronavirus infections, because more states are going to have to roll back and lock down again. If that does indeed happen, hasn't this market really gotten ahead of itself, and are a lot of investors going to be left holding really sour baskets at the end of the year?
Yeah, we're 100% on the same page with that view. We continue to believe that this has been a square root shaped market recovery, not a U, not a V, not a W, or whatever other letter of the alphabet you want to call it. We've seen a sharp downdraft, obviously, a sharp rally, but we continue to believe that the market has gotten way ahead of itself, particularly at current valuation levels. Just shy of 22 times the forward PE on the S&P 500. For mid and small caps, we're seeing all-time high valuations. The underlying fundamentals don't back that up. And so the market has absolutely been rallying in anticipation of this big snapback, this V-shaped economic recovery. We think things are going to improve into the second half of the year, but at a much slower pace than the market's anticipating. And so that's why we are sticking with our square root shape. We're going to chop around here, certainly over the course of the summer. The next data point that we're really fixated on is what happens with Q2 earnings season. You have to think that the market is pricing in the earnings growth expectation of a down 44%, which is an insane number, and yet the market has rallied as hard as it has. He's going to be guidance. We basically don't have earnings guidance across the market yet. And so if during Q2 earnings season we see some guidance or some visibility coming out of the companies, maybe that can help fuel a market rally into the second half of the year. But we just think it's going to be awfully choppy out there. It's not a bearish story, let me be clear. I think there's a strong underlying level of support, certainly with Fed action, but very, very hard to see the catalyst, particularly in an election year, to keep this rally going.
Jared, over to you. You know who has gotten a lot wealthier this week? Elon Musk and Jeff Bezos.
Yes, they have. We're looking at the NASDAQ 100 heat map, and not a lot of red on this board, a lot of broad participation, although the NASDAQ 100 is lagging right now at a record high, along with the NASDAQ composite. Tesla is in the lead, adding another 9% to its incredible run this year, almost up to 200%. That's after deliveries for the second quarter exceeded expectations. And then you look at the leaders here. We got Liberty Group, Expedia, T.com, Travel.com, Booking, a lot of these travel stocks, and just kind of a broad swath of the risk market that we like to see when the yield curve is expanding, as it is today, is happening right now. So looking at the Dow, which is more representative of the financials and the industrials and the energy group, we see even more gains. Sorting by performance, American Express, that travel play is up, along with Chevron, Boeing. So we got energy, industrials, then Goldman Sachs adding the financials in there, along with JP Morgan. Some nice leadership there. Pulling up the rear, but still in the green, we have some staples plays like McDonald's, Johnson & Johnson, defensive plays, which are Merck, Walmart. Microsoft is up there too, but kind of lagging right now. Here are those travels plays. Once again, we can see nice gains in the cruise and airline sectors. And also taking a look at the banking sector right now, we see some nice gains right there.
All right, thanks, Jared. And President Trump is speaking right now in a press briefing about that incredible jobs report this morning, saying that this jobs announcement proves the U.S. economy is roaring back. Amanda, I would love to get your reaction to that. Are we roaring back? And is the market discounting the fact that we have got an election here in November, and it is not clear that the incumbent will remain president?
There are a laundry list of risks that the market will need to wrestle with in the back half of the year. And certainly the election is a big one. Even if you just take a step back and say, what does the stimulus look like at the end of July? I think the market's taking a big leap of faith, assuming that the fiscal stimulus programs that have been in place as a safety net will be re-upped in their current form. The closer we get to an election, the more difficult it is to get policy pushed through and approved. Likely to be a lot of arm wrestling as we move into this presidential election cycle. And so our view on this is that the market is not pricing for a shift in power, that is a Democrat taking control of the White House, or frankly, even a shift in the House and the Senate. And so that could become pretty meaningful of a risk as we get closer to the election. So an important one to watch closely that's absolutely not priced in our view.
Yeah, Amanda, just following up on that and your concern about the lack of ability to deliver future fiscal stimulus, just noting the strength in a lot of the headline numbers this morning that we got from the various jobs reports. Is it possible that this good news equals bad news? Because then the calculus is going forward that maybe we don't need the stimulus if the numbers are good.
It's such a good point. I totally agree that there will come a point where there's this paradox of good news equals bad news. I don't think we're quite there yet. I would like to see on the fiscal stimulus side programs that really help fuel future growth as opposed to just being kind of a safety net. So we'll see if we get that kind of evolution moving forward. But I think the other thing that's important here is what the Fed does. Certainly the jobs report was strong, claims not so strong. I think that gives the Fed a green light to really keep policy easy. The downside to that is they talked pretty decisively and clearly about not wanting to get involved in yield curve control. So that's not great news in terms of getting rates moving higher in a meaningful way in the short run. So if you bring that back to kind of market implications, it's really why you're seeing, at least aside from today, some pressure on the value trade. It's rallied hard off the bottom, but it started to fade here pretty meaningfully. And it's really a function of those interest rate sensitive sectors, financials, REITs. Again, what is the catalyst if we're in a much lower for much longer interest rate environment? Tough on that part of the market. So definitely a winners and losers kind of bifurcated market. We saw this pre-COVID, we've seen it during COVID, and we think that trend is very much likely to stay in play through the rest of this year.
All right, Amanda Agati, Chief Investment Strategist at PNC. Thanks as always, and enjoy the long holiday weekend.
Thank you, you too.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.